Hey soldiers, is the U.S. housing market imploding? If you are buying a home, selling a home, if you own a home, all of this has ramifications for your personal economy. And further, if you're in the real estate business, say you're a realtor, a mortgage professional, home inspector, all that, you better watch this video because we're going to talk about 5 signs that indicate that indeed the U.S. housing market is imploding. Now, I know you're not hearing this on mainstream media because they like to urinate upon you and tell you it's raining.
Don't urinate on my leg and tell me it's raining.
Barry Glazer, legal advocate for the injured, disabled, and urinated upon.
Meanwhile, the government says everything's just fine.
I'm not concerned about the strength of the dollar. I'm concerned about the rest of the world. Does that make sense? Yes. Our economy is strong as hell.
If you didn't hear him because he was eating his ice cream like a 5-year-old, what he said was our economy is strong as hell. Well, let's take a look at what's going on in the U.S. housing market and delve deeper into whether or not he had brain freeze when he said that. He has brain freeze when he's not eating ice cream. The U.S. housing market is absolutely imploding, but nobody should be surprised. In fact, we were warned way ahead of time that this would happen. Now, we were because, look, it doesn't take a genius to understand if the interest rates are rising steadily. In the face of more Americans having to work 2 jobs, some of those jobs are 2 full-time jobs in order to make ends meet, then indeed the economy is not healthy. In the course of my business, I had occasion to happen upon a woman who is having an older woman, over 90, no family. She's having a lot of trouble affording groceries. Okay, and now she can't work 1 job, let alone 2. In this cost of living increase that they just got in Social Security, well, it's not 16%. So it doesn't match real inflation. That's one of the reasons why inflation is not calculated the way it was in the 80s and prior. Because if you had the real inflation rate, then the interest we have to pay on the national debt, as well as these cost of living increases in these entitlement programs like Social Security, Medicaid, and Medicare, would be a bigger burden than they already are. Now, the Fed has come out and they have signaled that they are going to raise rates at least 2 more times in 2022. So that would be pretty aggressive, and it would certainly affect home values, because if they do that, then of course the mortgage rate goes up. We know how it works, and that would cause a slowdown in the housing market, and it would also cause people who are selling their home to have to lower their cost, because you're going to find homes stacking up and the inventory and days on market is going to get a lot higher than it has been, indicating that demand has slowed. And we all know that when demand slows, then supply increases and you get lower prices. Try to get that stuff moving, okay? And I don't know if the lower prices will even help in the short term once this occurs, because people are going to be loath to go out and spend big money if they are in a situation where the economy is uncertain. And it will remain uncertain at least for the next 2 years because of, pronouncements like you just saw our president make. He's out to lunch. He does not know what's going on. It's time for all you people that voted for him to just accept that. Okay, I mean, we are where we are. Okay, the guy's got 2 more years in office. It is what it is. But we can all agree that Robert Gates, who was the former defense secretary to Barack Obama, President Barack Obama, he came out and said that Joe Biden's leadership basically would be disastrous because he hasn't made a correct decision in the last 50 years. And that's someone from the Obama administration. All right, so the numbers are looking a lot like they did back in 2008. We've got Redfin. Now, Redfin's a real estate brokerage. They're saying that the number of homes sold in the United States during September dropped by 25%. That is a significant number. Home rates declined the most on record in September of 2022 as mortgage rates surged and pushed prospective buyers out of the once hot housing market. Now, the reason that happens is, quite kind of intuitive, because if you are in the housing market and you can afford one type of house, one price point, of course, that affordability picture is going to change once those interest rate goes up, once the interest rates go up, because your monthly payment will be higher. Next up, the number of new housing starts dropped by 8.1% in September. Home building pulled back in September as buyers faced spiking mortgage rates that have made homes increasingly unaffordable. Again, the mortgage rates tied directly into affordability. That's not rocket science, not for us at least, as soldiers of finance. Number 3, the number of buyers touring new single-family homes has fallen to a depressingly low level. All right, so the National Association of Home Builders has a scale. According to that scale, prospective buyers trafficking through new homes, take a look at it. See the model and whether or not you want this amenity or that floor plan, what have you. That's down to 25 on their scale. Now, if it gets to a 1, that would be considered just total calamity, okay? Nobody's going through these homes. And the trend is in that direction, unfortunately. Okay, so let's take a look at some perspective. When the pandemic first occurred and everything shut down, okay, people were just in their houses. At that point, traffic dropped off the scale. You can see from this chart that at that point, traffic dropped to 30, trafficking through these new houses. But shortly after that, it shot up to 90, and it's been pretty much above 75 for a while. Now, it's been steadily dropping since 2021, and now we're at 25. Okay, so this is what the sentiment is out there among people who are walking through these new home developments. They're, taking a step back. New homes are expensive, man. Okay, so and it depending on how big the home is and how expensive, you might need what's called a jumbo loan. All right, number 4, home builder confidence has fallen for the 10th consecutive month. The overall confidence of builders in single-family houses fell for the 10th month in a row in October as rising interest rates, building material bottlenecks, and elevated home prices continue to weaken the housing market. This is again according to the National Association of Home Builders. With today's index value of 38, the National Association of Home Builders Wells Fargo Housing Market Index is now nearly where it had been in May of 2020 during the lockdown, and below where it had been in February of 2007, shortly before the Great Recession, on the way down into a housing bust. Okay, so we're seeing numbers that are reminiscent of the Great Recession, the whole housing kerfuffle that we got into back during that period of time. Very disconcerting, right? All right, the 5th one. Demand for mortgages has plummeted to the lowest level that we have seen in 25 years. Now, we see that because you guys know we own a real estate company, and we see that a lot of we got a lot of mortgage companies calling us saying, hey, come out to lunch, let's talk, because they're really trying to drum up business. Business has become more scarce for the aforementioned reasons, of course. And so they are out there actively looking, okay, which makes absolute sense. And some mortgage companies have engaged in a lot of layoffs too. Real estate companies too. We have real estate companies like Keller Williams laying off, Redfin laid off, EXP is laying off, Coldwell Banker. So there's a lot of, pulling back. And again, they're laying off employees. We're going to get to another aspect of that industry in terms of the frontline agents in just a moment. And if you are one, you definitely need to hear what I have to say. Demand for mortgages, of course, has plummeted for the 4th straight month. Fell last week to the lowest level since 1997, the demand for those mortgages, as interest rates continue to rise. Homebuyers' demand for mortgages dropped 4% for the week and was 38% lower than the same week 1 year ago, according to the Mortgage Bankers Association. Applications for refinance fell 7% compared with the previous week in seasonally adjusted terms. Demand was 86% lower than the same week 1 year ago. Okay, so when you look at it from the standpoint of mortgages, just the, people getting the mortgage, that dropped 4%. The demand dropped 4%. And was 38% lower than the same week 1 year ago. As for refis, now, of course, refis are going to drop because most people, their mortgage rate is already below where we are now. So naturally, applications for refinance fell 7% compared with the previous week, and demand for refinances was 86% lower than the same week 1 year ago. All right, and we all know this is because they put trillions of dollars out on the street during the pandemic, and they said, don't worry about inflation, don't worry, it's transitory, we're not going to have a recession. Now they're redefining recession because we're in a recession. And not even the Inflation Reduction Act is reducing inflation because it was never designed to. We've gone over that at length. So here we are. They're out there telling people that the Inflation Reduction Act will reduce inflation next year. How convenient after an election, right? Okay. All right, if you're a professional in the industry, listen up. Now, we've already talked to the folks who are in the market to buy. Remember, mid-80s, 20% mortgage rates. People have been spoiled. They think that there's 3% mortgage rates are like what it's supposed to be at all times. Not true. Okay, look at the chart. So if you buy a house now, your affordability, yes, may change because of the interest rates. But just also keep in mind that as interest rates fall, you're able to refinance and in most cases realize a lower payment. You do not have that flexibility, that opportunity when you rent. Now, for the professionals that are out there trying to figure out what the hell am I going to do? Because we've had this business since well before 2008, and we rode through 2008. But we also saw a lot of people leave the business because they just didn't know how to handle the shift during that time. A lot of people left the business, lost their businesses, their real estate sales businesses. Okay, we've talked about the corporate side of the real estate industry and how they're making changes. A lot of those changes are taking the form of layoffs. If you are a real estate practitioner, you have your license, or even if you're a mortgage agent or one of these other professionals in the industry, you need to understand that if you do not shift, if you do not adapt rather to this shift, you're going to be a dinosaur and you're going to be out of here because the meteor is on its way. So to that end, this is a picture of my lovely wife. Yes, I'm married up. And if you send us an email at mcenow.com, we will be happy to send you an invitation to a weekly session that we have that talks about basically just how to handle this shift. We're not selling anything. We're just talking to people about surviving and thriving in this new environment as someone who is in the real estate business. This is a web-based event, so I don't care where you are in the country, you can join. Okay, so send us that email. On Tuesdays, we get a bunch of experts together and we go through what's happening in the industry and we understand how to better position ourselves as business owners. We're going to do something similar for the financial services industry as well. But for now, real estate. If you're a practitioner, get on board with this. We'd love to help you not only survive this new environment, but thrive it. Many will not. Guys, check out our latest video. It's actually on the subject of real estate. We're talking about how there are more and more renters in America than ever before. This is another pressure on the real estate sales industry. Watch that video, learn more. Guys, I'll talk to you soon.